another trading session and another day for record highs for the major equity averages. Today we saw intraday records for the Dow, Nasdaq, and S&P 500, and this does come on the heels of some corporate headlines. So joining me now is Alan Valdes of SilverBear Capital. Alan, great to have you here today.
Remy, thanks for having me.
Well, hard to believe, but we got new intraday highs for the equity averages. Today's session, we did get some corporate news, news about Walmart's buyback plan, and of course the P&G news. Now, we got news that Peltz's bid for the board seat for P&G was rejected, and we saw P&G shares fall initially. So what do you make of today's action?
Pretty crazy, but, first of all, the market's at an all-time high. Since the election, the markets have added $5 trillion in value. Walmart, now you look at Walmart, the news today, they're going to go head-to-head with Whole Foods, with Amazon. They want to increase by 40% their online business by 2019. So they're really getting very aggressive out there to counter both Amazon and, I guess, Whole Foods. It's just been an amazing run we're going on. Whether it's Trump or whatever, it's been an amazing run.
And as we look forward, it's the bigger picture fundamentals that will continue to be in the spotlight. Tomorrow, focus will be on the Fed minutes because of the Fed rate hike expectations. And of course, there are expectations regarding reform down in Washington, D.C. So what do you really expect to see as we head into year end?
Good point, because last week, there was the jobs number came out, and there was a lot on the fact that, we were down 33,000 or what, but most traders down here knew we would be down, maybe not that much, but because of the hurricanes and whatnot. But overall, in that jobs number, you saw wages grew, a sign of inflation, which definitely helps with the rate increases coming down the road. So I think if Yellen was on the fence, last week's jobs number, with the wage increase, really cemented a price hike in December and probably going forward also.
And Alan, shifting our focus on overseas, we do still have political risk regarding Brexit, Spain, and geopolitical risk regarding North Korea. And also there are concerns about diplomacy between the U.S. and Turkey. So given all these concerns, how have you factored this into your overall outlook, especially on the heels of the IMF warning about the European outlook, especially given Brexit and Catalonia?
Well, Catalonia and Brexit, they're the biggest ones. We're always going to have other problems down the road, that's for sure. But they would hurt our multinationals, no question about it. It's kind of early to tell, but Catalonia could be a problem going forward. But it could be interesting to see how that flux. North Korea, they're always going to be on the map. Iran, all these guys. It's a volatile world we live in. But at the same time, if you look at the world markets, they're strong around the world. We have 129 trillion now in liquid dollars, whether it's in bond markets or equity markets around the world, all-time record. So we'll probably see mini correction, but yet we're the best house in the worst neighborhood. We really are. So I think a lot of money's still going to pour into the U.S. As you see in Spain, a lot of that money's coming here, and you're going to see that continue. So it might offset our multinationals, but overall, I'm not concerned.
Alan, that's a great analogy. So thank you so much for weighing in today, and thanks for your insight as always.
Remy, thank you.